Here's a 1-year review of the #1 growth ETF that I personally own in my own stock portfolio, because growth ETFs are amazing because they have the potential to outperform the S&P 500 and the stock market overall. And in this video, I'm going to be breaking down exactly the pros and cons of growth ETFs, including why I chose my #1 growth ETF, how much money I've actually made from my #1 growth ETF over the past year, how much dividend income I've received from my growth ETF, and even what are the best growth ETFs that aren't talked about in this video. Because honestly, I'm not biased because there's so many different growth ETFs that are amazing to invest in depending on your investing preference, strategy, risk tolerance, etc. And as a bonus, I'll even include a second growth ETF that I personally invest in that I just started investing in 2 months ago. Now, if that all sounds good to you, let's get started. So very quickly on what is a growth ETF. It's a type of ETF that invests in fast expanding and often more volatile companies in hopes of outperforming the average returns of the market. So if the market or the S&P 500 returns on an average of 10% per year, growth ETFs try to beat that number. And over the past decade, growth ETFs have actually outperformed the S&P 500 by a very wide margin. So what are the pros of a growth ETF? Well, for one, they have the potential for outperformance, where if you have a higher risk tolerance, a longer time horizon until retirement, and maybe want a piece of the pie of those high returns, then maybe take a look at a growth ETF. Another pro is if you like to invest in technology stocks, then growth ETFs can honestly be your next best friend because they invest in a ton of big tech names. And lastly, they make for a great complement to a 2 ETF, 3 ETF, 4 ETF, I don't care how many ETFs you own, as that higher risk, higher reward type play in your growth ETF category. Moving on to the cons of a growth ETF, first off, they are highly volatile. As you can see, during a huge stock market pullback in 2022, the S&P 500, which is actually a mix of both growth and value stocks, actually went down way less than a pure growth ETF. With all this in mind, hence growth ETFs being higher risk because they have those high-tech names that are going to be way more volatile than your dividend aristocrat counterparts. The second con of growth ETFs is that they pay a low dividend yield. Why growth ETFs even pay a low dividend is because that the companies inside of these growth ETFs take their leftover profits and invest it right back into their business to expand their business, expand their revenues, which in return will expand their share price returns to outperform the stock market, and instead of paying that dividend out to shareholders. Moving on to the #1 growth ETF in my portfolio, and that's going to be Invesco's qqqm, or the NASDAQ 100 index. And the second growth ETF that I personally own is going to be Charles Schwab's SCHG. Just because I own these two growth ETFs doesn't mean honestly that they're a perfect match for anybody to invest in. On your screen is going to be some of the best growth ETFs that I personally love, because there's not going to be, like I said, a perfect growth ETF. Every growth ETF is different, whether it's the expense ratio, the investment objective, and honestly, if it fits your risk tolerance, your investing goal, and objective to get you to that retirement faster of that $1 million or more, then honestly choose that growth ETF. Do your research because there's plenty of different options that are going to be suited for your portfolio. Why I own qqqm. The NASDAQ 100 is the index that qqqm tracks, and it's a fantastic and great index. qqqm historically has outperformed the S&P 500 or Vanguard's VOO, and I love the big tech and growth names in this ETF. I used to own QQQ before I made the switch last year to qqqm to save money in the long run because it has a way lower expense ratio. In qqqm over the last year, I have a total balance of $10,955.47, or just over 56 shares. Why I own SCHG? Well, it's currently my top holding in my Roth IRA that I made just about a couple months ago, and SCHG also has a lower expense ratio than QQM and SCHG invest in stocks regardless of the stock market exchange. So Invesco's QQQM invests in stocks only in the Nasdaq Stock Exchange, where SCHG invests in stocks in both the New York Stock Exchange or NYSE and the Nasdaq. Why this is honestly a big deal to me is because SCHG invests in amazing different growth stocks that aren't listed on the Nasdaq index, which aren't going to be in QQM, which I like for the added benefit of holding different amazing growth stocks because I don't like to discriminate based on the stock exchange, which QQM does. In SCHG, now I have a total balance of $1,894.11 or 19 shares exactly. Moving on to the returns, the gains in 1 year of QQM is $1,679.11 or 15.32%. Now, a lot of people might say, well, Marcos, why aren't the returns like over 25 plus, 30 plus percent? Well, when you dollar cost average, you don't always get that same return like you see on the Robinhood charts. You're going to be buying in increments, so all the money is going to be growing at different times and at different percentage returns. Now, I made a lot more money than over like $1,500 in QQM because I switched from QQQ to QQQM. So when I made that switch, I had to sell off some shares and honestly I forgot the return I got. I know it was positive, okay? But cut me some slack because in the future, this amount should be way more if growth ETFs continue to skyrocket to the moon like they have over the past couple of decades. The total gains over the past couple of months in SCHG is $155.21 or 8.19%. Moving on to the amount of dividends I've received since it's over a 1 year time frame, I'll use QQM because I have invested in QQM for over a year now. Now in SCHG, I only have it for the past couple of months, so I'm not going to use that for the dividend income. Now in March 2023, my dividend payment was $1.53 from QQM. Then in June 2023, that went up a lot to $3.13. And then in September 2023, that payment increased to just $4.41. In December, to end the year for 2023, I received $9.15 for that quarter. And then my highest dividend payment from QQM was in March 2024 of $13.15. So my total dividend income from QQM from March 2023 to March 2024 was $31.37, which is honestly pretty low. Now I do plan on continuing to buy both QQM and SCHG, QQM being in my taxable brokerage account and SCHG in my Roth IRA for the next 40 plus years until I retire. A quick summary over the last year, and it has just been awesome. I love complementing a growth ETF to my investing strategy of a 3 ETF portfolio, that being a broad market ETF, a growth ETF, and then a dividend ETF. Being my main strategy and my highest holding is the S&P 500 or Vanguard's VOO. Now go check out that video if you want to see a 1 year review of investing in the S&P 500. Now growth ETFs are super simple and easy to understand and even invest in as a complete beginner in the stock market, trying to increase your returns as fast as possible with the least amount of risk than buying and holding like individual stocks and picking them yourself. If you guys like this video, please give it a like because this cute puppy did. And right here is going to be my other investing video of investing in the S&P 500 over the last year. And right here is going to be a free course on how to even invest in ETFs. Now, I love you guys so much. Continue to crush in the stock market and take it easy. Peace.